Hello everyone, it is Sterling here from Day Trading Forex Live, and I got a good video for you guys today on the new European Securities Markets Authority. If you guys know anything about what just came out from them, they just dropped the leverage on you guys. Welcome to the US leverage. In fact, you got dropped down below US leverage, so you got a few more years of hefty leverage there in the Eurozone, but then the good old government regulators that don't have anything better to do have struck. But on a serious note, what I'm going to talk about is three things in this video. So number one is I got a ton of emails on this, and the gist of the email was like the end of the world of Forex trading. So I'm going to dispel the myth that this is the end of the world, number one. And not only dispel that myth, but also illustrate that it's not a big deal. Number two, and really how we're going to do that, is I'm going to walk through an example of leverage, how you're calculating leverage. It's going to be a useful tool for you to know this moving forward, but it's also going to show you what type of money you have to have in your account to trade a certain size so you get a good reference point. And then number three, I'm going to show you using that example, not only that the risk achieved is the proper risk, but I'm going to show you that you can achieve the proper risk and still over leverage. I mean, if you really want to go beyond what I would deem as a proper risk, you can still do it very easily with this risk per trade, with this leverage, with 30 to 1 leverage, even with 20 to 1 leverage, quite honestly. So the example here is going to be the pound dollar, and we're going to do it based on a balance of $1,000. So let's say you have $1,000 in your account. And with that $1,000, you want to trade one mini lot. Okay, so you want to open one mini lot of the pound dollar. Maybe that's what you trade. You want to know, can you still open that same position size? So with a mini lot, that is 10,000 units, or 10,000 of the base currency, in this case 10,000 pounds. So what we want to do is we want to take 10,000 pounds and we want to times that by 3.3%, which is done this way, times it by 0.033. That's 3.3%. The reason you do that is that's the percentage way of calculating a 30 to 1 leverage. So we're just doing the opposite here in this case. And what that does is that tells us how many pounds we need to have, because remember, this is still in pounds. So if you take 10,000, you times it by 0.33, that comes out to 330. And remember, this is still in pounds, so that's 330 pounds. You would need to then times that by the exchange rate. So the exchange rate right now is in a ballpark of 1.4000. It's a couple hundred pips above that right now, but I'm just going to use that for even number purposes. If you take 330 and you times it by 1.4000, it equals $462. Now, I did the math on that earlier. I'm not just doing it in my head, but that is what it would require on margin to control one mini lot of the pound dollar. Now, what you can see in this example is that the pound dollar with the higher exchange rate, it's going to cause a higher dollar value on the size. If you were talking about the euro dollar, it would cost less to control it. So this is a high figure even. You're going to be dropping down when you're talking about a lot of other pairs. When you're talking about what you're able to buy versus its pip value, you're going to find that this is your higher figure. Things come down from that point. So in this case here, $462 to control one mini lot. Now let's say you had a 20 pip stop loss on that position, which is a common stop loss that we use at Day Trading Forex Live for our strategy that we use. If you had a 20 pip stop and you were using one mini lot, dollar per pip is what it would be on one mini. So that would be a $20 loss if you lost. If you're using 2 to 1 reward to risk ratio like we use, then that would be a $40 profit. $20, what is that in a percentage basis to your $1,000 account balance? Well, 20 pip stop, or $20 stop loss, $20 is 2% of 1,000. So you can get to 2% risk very comfortably. I mean, think about this for a second. With 462, I wouldn't really recommend it. If you double this though, 462 times 2 is 520, what's that, 924? So $924 is what it would cost to control 2 mini lots. If you had a 20 pip stop on that, that would be a 40 pip stop loss, or $40 stop loss. 20 pips times $2 a pip, $40. That would be a 4% risk. You could even go higher. I mean, if you had a one mini lot on and you had a 50 pip stop loss, that's 5% risk. If you had a 100 pip stop loss, that's 10% risk. The point I'm getting at here, guys, is that you can still get to a proper leverage. You can still get to the point where you're using the proper leverage, and you shouldn't be over that figure anyways. If you're over that figure, then you're having all the other issues like revenge trading because you just lost, so you want to double down, which is another one, the double down as I call it. You want to do the double down revenge trade where you jump in that long that you just flipped short and you doubled the position because the damn thing's not getting away without you. You guys all know what I mean because we've all done it, and it's funny because I did it 100 times in my career, 1,000 times probably. That is, in a way, it's kind of eliminated with this leverage. I don't look at it as a bad thing. I don't like government intervention, but at the end of the day, this is going to be a positive for most traders. It's going to keep you to a good risk per trade, and it's going to put you in a better position to start trading like a professional, to start trading like somebody who doesn't think this is a get-rich-quick scheme. If you went over my last video covered how off just 2% risk per trade, which is covered here, off 2% risk per trade, and I think it was 12 trades in a month, on 2-to-1 reward to risk ratio, and just winning half of those trades, I showed that that came out to a 10% growth at the end of the month. Now, if you take that growth figure, and you run that figure over the course of 4 years, a $10,000 account compounded at 10% per month hits $225,000 at the end of 3 years, hits just shy of $1 million at the end of 4 years. What I'm trying to illustrate to you guys is that you can still grow your account. You can still grow your account rather quickly. That was based on 2% figures. So if you're using figures like 3 and 4%, I do not recommend it. I'm just saying if you are, and you are consistently profitable, the account can grow rather rapidly if you're compounding that balance. I would encourage you to go check out the last video. It's titled 4 Pivotal Rules to Trading Success or something along those lines. If you're on the YouTube channel, you'll find it, or if you're on daytradingforexlive.com, just click on the videos tab above this video, and it'll be in that video section, probably in the last few videos that we did, if you're viewing this video somewhere around the early part of 2018. All right, guys, I hope you enjoyed the video. If you're in the Eurozone, welcome to the wild world of government regulation, and enjoy, I guess. That's all we can do. But the point is, it's not the end of the world, guys. You can still achieve the proper leverage. You can still have the proper risk per trade. And in fact, you can still go past the proper risk per trade. So it's really not an issue. The bigger issue is focusing on yourself. The bigger issue is looking back at yourself and saying, can I even compound an account? None of this even matters until you get to the point where you can grow an account. None of this doesn't mean anything. If you can't take a 1 micro lot, if you can't, with whatever account balance you have, if you can't take 1 micro lot and be consistently profitable over 3 months with just 1 micro per trade and see what that growth would be, we're not talking about account growth, we're not concerned with account growth, we're concerned with using that 1 micro as a sample so you don't lose money, and then scaling it up to whatever size you would technically have been doing, see what account growth you would have, but grow it from that point. If you can't first trade with the micro, then none of this even matters, guys. That's why I say people put too much focus on this. You need to focus on learning to trade first. Find an education you believe in. I don't care if it's Day Trading Forex Live. Go look at the reviews, and number 2, make sure they show you some type of track record. Find a service that fits you. Get an education. Until you're consistent on a micro, don't even worry about this. That's going to do it for me on this one, guys. See you back for the next video. Until then, happy trading.